The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. Really interesting day. And of course, you've had hosts all the way from 8 o'clock this morning. Just great shows. And let's see if we can follow this one up with a lot of information. We've got the Dow up 135 at 18,147. The S&P is up 10 at 2119. The comp index is up 33 at 510. 5,110. Sorry, whoops. Anybody slip off the chair? Sorry about that. You got gold down 3 at 1191. Silver's down 19 cents at 1660. Platinum's down 3. High-grade copper is at 2.73, just kind of stuck there. Crude oil is down. It's down 81 cents at 60.47. Bonds are down almost a point and a half at 150.5. This is really interesting. And the TLT has plummeted. The TBT, the inverse, is trying to test the highs. We'll go through those in a minute. Let me just finish this before I forget. And we'll run out of time for this particular section. And what we're looking at here, which is, I think, going to be quite important, is what happened here. Okay, let me just move that up. There you go. Sound is better, I bet. And the dollar, DXY, is trading right now down 0.39. It's at 95.44. Maybe I'm a little bit slow, so maybe it's down in the 95.30s. Really interesting. Just the other day, we were looking at it and it was holding so beautifully with stochastic up there in the 90-something% area. And then, bam, out of the blue, you've got the dollar plummeting. And you've got the euro. Now, the monthly charts and weekly charts are not that great. But the euro is having a rally. If it copies the TBT, it should go from the 1.273 area to retest close to or at the 1.1465 high in the euro-dollar currency pair. In the 120-minute chart, this is in leg C. Let me show you something. Now, what I'd say to subscribers, and I made a big deal out of it over the last couple of days, a really big deal. And what I've been saying is that you've got to see lower lows that are holding at the close, and intraday, you've got to see any bounce revert back by the close towards the lows, number one. Number two, you've got to be making those lower lows in the Dow, the S&P, and the comp index, and the New York Stock Exchange, with the volatility index rallying and holding at the highs of the day. And it's going to be persistent. That's number two. Number three is probably something that just covers the whole thing, and I've been making such a big deal about it for the last 2 years. Until we get sustained bad news, in other words, news that is interpreted by the market as being bad, we're already June the 3rd, from the signals that we were getting just the other day, we should be down at Dow 17,780 at this particular point. What I said to subscribers, in fact, where did I put that? I wonder if I've still got it. Let me just check. Is that it? Yeah, that's it. In this particular section here that I show every day is the, did I get rid of it? I guess I did. All right, well, I don't have it. In my overview section, what I said was, be very careful, because all the things that we are looking at, question in the den. Basil, what did you find as bad news? Peaky in the den, I actually couldn't care. It could be that they just added another flavor. It could be that it could be anything in the world. I don't even care what it is. The market has to interpret it as bad news, and that bad news has to be ricocheted off other news that's going on, and it has to accelerate. So you could start off with the bad news about Greece today, but then you've got to stay lower, number one. Number you've got to have a follow through within a couple of days, pushing the market even lower. And then whatever the news is, it's got to accumulate and it's got to land up sitting like a dark cloud over the market. Until you get that, you can have all the signals in the world, whether it is a Chapman wave peak F, whether it is a Fibonacci expansion, whether it is a lunar, solar, whatever it is, issue. Until you get the residual, the internals that are not showing residual strength, as we've seen now, where sudden excuses are used to shoot the market up. I want to see lower lows and lower highs, and I want to see the volatility index increase. So whatever the news is, if it impacts the market negatively, whether it is, I used to say Greenspan raising his eyebrow, or Bernanke, or Yellen, I don't care who or what it is, the market has to interpret it as bad news. I'm going to refine that. I'm going to say that the chances are that whatever the bad news is, it's going to become pervasive and it'll be an economic issue. It'll be economic, whether it's international, national, it'll be an economic issue if it's going to be sustainable. So let me just show you a couple of things here. The VIX index now, and actually for the very first time in quite a while, I'm starting to see signs that are saying, well, the day is young. But just at this particular point, I'm starting to see signs saying to me that fund managers for the very first time are starting to buy protection. Protexia, as they say. And that to me is a sign that says, don't ignore that sign. You might be rallying now. You haven't broken to a new high. Look at this. Here's the Dow. Here's the Dow. Beautiful candle as it stands above the 9-period moving average. But we've been down for 6. 1, 2, 3, 4, 5. For 6 sessions below, sharply below the 9-period moving average. You had to have a rebound, and that's what I was saying today. We can expect a rebound, even though the MACD and the technicals are low. The stochastic just turned positive right now, although it's still it's at 29%. MACD is just flattening out. So that's what I'm looking at, number one. Number two, a whole new section in the Dow, that is. Number two is it held the dashed red support line. That's what I mentioned to subscribers. Number three is that when you've taken time, and what I was showing was that we had taken a lot of time, but only moved down about 350 points or something like that. That's usurping energy and time, but not price. For this number of bars to be down, we should have had a much sharper down move. However, now this is always fascinating to me. Thank goodness in the work that I do, there are a number of signs saying there are stocks that you want to be buying. So we have had, I'll tell you right now, because they're already well off levels that we were looking at. The XLF is acting very nicely now. That's that is the financial S&P Spider Fund. It's at 24.93. It looks like it wants to try to get to a leg D above 25.06 G/C. It looks like it wants to try that, but that will also make a leg D in the weekly chart, but still below the 25.14. So this is the move that has to take out 25.14. Why? Look at this beautiful, this is what I showed my subscribers, in the XLF weekly chart, 120-minute chart. Look at that beautiful cup formation. Went right to the 200-period moving average at about 24.47 or something like that. What was that? 24.50. And now it's trading right at that pink dashed Chapman wave inside wedge target resistance line. And that's leg B, and it suggests that, yes, we should try to get by the 5th, by Thursday, should try to get to the 25, what is that, 25.06 level to 25.16. I don't know if we can, but with interest rates down, this is where the banks should be doing well, and some of the banks are doing very well. I mentioned to my subscribers, I don't understand it. Why are the steel stocks acting so well? So we grabbed a steel stock this morning. I'm probably tempting fate right here. And we got it this morning at the low. and it shot up from the $5.40 level to a high so far today of 576. That might be it for now because it's leg D. It hit the Chapman wave inside wedge target line right there. So now we can expect some kind of a pullback. But I just wanted to say there have been things to buy. And that's why I've been talking about this as a bifurcated market, a market that is split, bifurcated meaning split by. And at the same time, there are things that you can buy and there are things that you can sell. We have a short position. I have no idea if it's working right now. I haven't looked at it. Yep, yeah, we're up. A short position, we're up 2 cents or 3 cents. Isn't that interesting? All I can say is that's working. But we did get stopped out of our 1/3 position long in one of the Dow ETFs. Small, I think 1.6% loss. And we have, in fact, got protection because I think this is a market that is highly vulnerable to the upside, vulnerable to the downside, and we want some kind of protection. All right, so enough about those things. Let's go to what I thought would be very interesting. I almost did it. I'm actually not sure why. I think I just ran out of time and room on my Tiger, the page that is the Traders Corner. But I wanted to grab the IYT just for a bounce. And look at that, nice move in the IYT. Opens at 151.65, trading at 153.24, up 2.40, up 1.5%. Why? Because in the 120-minute chart, let me just show you this here. In the 120-minute chart, it had already made some kind of a turn with a higher low in the stochastic and a higher low in the MACD. That's called a positive divergence, number one. Number two is that if it was going to rally at all, wow, after such a beating that it's taken from 167.80 down to 148.43, that is a 20-point move to the downside in the transportation index, the iShares Transportation Average ETF. So I thought, hey, for a bounce, this is good. I think it can still bounce. 154.40s is the 200-period exponential moving average. 154.50s is the 9-period moving average in the weekly chart. Then I think there might be a problem. All I'm expecting is that the QQQ series, and we've been waiting for this, not 4, but there used to be 4, now there's 3. QQQ series is doing this, is trying to, let me just move this away here, is trying to go to leg D in the daily chart. That'll be at 111.07. Didn't I just talk about this? What was I talking about earlier on? With the left side, right? So anyway, yeah, above 111.07, 06 goes to leg D in the daily. And then it could make an overlapping wave by going above 111.16 in the daily to go to leg D in the weekly and double in the daily. I'll be right back. Basil Chapman, Tiger Nations. Give me a call.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So going back to the QQQ series, we're back. And the Dow's up 139, S&P's up 10. Now, this is very interesting. Dow's up 0.77, S&P's up 0.50. QQQ series is up 0.51. Dow's outpacing. It's going to be very interesting. Two things are going to happen, and we'll go to the XIV in a moment, but let's just look at the QQQ series. If the Qs fail in the next 3 days without making a new high, they would fail only if they take out the 109. Well, first you start off at 109.90s. Then you go to the 109.60s. If by next week you're breaking the 109.20s, be careful. Be careful, because what it's saying is that there wasn't enough strength just to make that nominal new high, and that the pattern would suggest that the 108 to 107s would be a target on the downside. I'm not yet talking about a smash or anything like that. I'm saying be careful. Now, there's a couple of things we must look at, because look, Apple has a bit of a rally today. It's up 68 cents. But I see no strength whatsoever in Apple. In fact, the way I'm looking at Apple, I'm not sure if it's worth shorting, but I just think it's biding its time. Going in a sideways direction, going to be very frustrating for new bulls, very frustrating for the bears. And until Apple really cracks the 126 to 125 support on a weekly close, I think that it's really it's just kind of sitting on the on the sidelines there. Now, I wanted to go to the XIV, what's the XIV? XIV is the VS inverse VIX short-term trading vehicle. And it's making this rectangle formation, which says it could go up in the shorter term. It could have a Chapman wave inside buy that takes it to a leg C and then a D, which takes you to exactly the 46.64 all-time high. Sorry, wasn't that wasn't the all-time high. Recent high 46. Wait, what did I say? 44, 54. Let me check that out. 46.64. Okay, so that high is not the all-time high, because the all-time high is in fact 47.66, made back in January, was it? July of last year. Oh, sorry about that. So that says that the 120-minute chart could have, in the 60-minute, it could give you a peak A, B, C, D. Could even get to the 46.64 level, or it could go a little higher. And if it goes a little higher, then what becomes the magnet? The 47.66 area. But at the same time, if you're looking at the technicals in the, and this is a very interesting index, because very often what we've seen is when the technicals look best, you got to be careful, and when they look worst, you got to be careful on the other side. They were looking terrible, even in the weekly chart, way back when it made that, was it the January low in the weekly chart, and then it just turned around beautifully. It spiraled from the 25s to the 45s. That's a big move. Now, let's just continue here, and let me give the parameters. The close in the XIV below 44.64 would be a negative, but really 43.80s. You start to close below that, that impacts the weekly, because the weekly 9-period moving average, which it hasn't even closed under, it's touched a few times, hasn't closed under since it broke out the week of the 20th of February. It hasn't closed under that. So that would be a big negative, because 42.40s would be the target on the downside. So let's just continue with this and say a break below is negative, a break below, a very short term below yesterday's candle of 44.61 starts off the negativity. And anything can happen. To me, it was just an emotional, the residual buying that I saw was that there were certain sectors that still had a lot of play in them, like the steel that I was talking about. Autos are not doing that well, and it's going to be very interesting. I've made a big deal. I showed it this morning. I had a whole analysis, a 4-part analysis on AN, which is AutoNation, which has had the best sales that they've had. It's just sold 10 million cars, just gave it away as a present. And it's in leg B in the daily, having bounced. I was almost thinking of buying it as a play on the autos. But I have to tell you, the weekly chart is not that good. And the monthly chart is good, but it's making me a little nervous, because it's coming back towards the 60.82 9-period moving average every month. And although it's holding well and doing well today, I'm going to watch this real closely. So it's a bifurcated market, and my suspicion was there was short covering and some new buying, but it's in the select areas that is most important right now. If you can have a split portfolio. I'll be back and talk about it.
It's hard to believe that it's been almost 2 years since Andy Hecht started his newsletter, The Technomental Commodity Report. In that time, he's delivered many winning trades for his subscribers. To commemorate Andy's 100th weekly issue of his newsletter, we're rolling back the monthly price to the introductory rate of only $59. This is a one-of-a-kind special that is only around until Thursday of this week, which is the day of his 100th issue. By taking advantage of this 100th issue special, you can lock in Andy's original introductory rate for as long as you remain a subscriber. That's an incredible 25% savings every month off the retail price. Andy delivers in-depth analysis of the commodity market every Thursday in each issue of the Technomental Commodity Report, while providing specific trading recommendations on ETFs and option positions within the commodity market. Don't miss out on this special, as there are only hours remaining. Sign up for the Technomental Commodity Report right now at the front page of TFNN.com.
trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back and A, B, C, D. So eBay, we're looking at eBay. See, money was flowing, very interesting, into some of the IPOs, but actually more the new IPOs. Let me just go through these. GoDaddy, GDDY. Yep, another nice candle today. Didn't I just do that last night? Wait a minute, what's going on here? How did I lose that information? Oh, look, I even did that. Look, here's the 120-minute chart, the Chapman wave notation and projections. There it is. Hit that leg F right there. That's interesting. All right, let's go on. I even remember writing it down. So we were looking at GoPro. Oh, that one's updated. Yep, there it is. Leg C up. Leg D in the 120-minute chart could pull back a little bit. Next, this week, it should still make leg D. So money went into some of these IPOs that came out, had fantastic runs, 30 to 90, and then all the way back down. And now you've got a GoPro up $1.03 at 59.43 GPRO. It's above most of the moving averages. It's a little extended here on a short term, but it's got all that to make up. It's got weeks and weeks to make up a run to the 98s again at some point. I shouldn't say weeks, I should say months. Amber. Remember, Amber came out with news last night. Big move. Look at that. Up 529 AMBA. That's Amberella. I think they're in the same. They provide something other for GoPro. Wouldn't be surprised. But this is a parabolic move in the daily and a parabolic move in the weekly. So we've got to be careful, because what could happen, parabolic moves don't mean to say that you can have an Eiffel Tower straight up, straight down move. It says that if it's still very strong, because the monthly is still has got a lot of, the tide is still positive, and we won't know that for a while, you can get into a rectangle sideways consolidation mode when it consolidates. Doesn't have to give everything back. Not if it becomes the new sexy stock or category of stocks for fund managers to save the day. Remember the biotechs, IBB, up a little bit. The biotechs were the best of the best, and now they're starting to fail one by one. So you've got to be careful, because when a very, very popular and sector that has a cachet starts to fail, the old fund managers keep going back in, and they don't understand why all of a sudden it's not working. It takes them a long time to figure it out. Meantime, probably the younger of the fund managers, or at least the hedge fund managers, are grabbing all these sexy stocks like a GoPro and an Amber or a GoDaddy or one of those. So let's just go on here. I wanted to talk about something that I thought was pertinent to where we are right now, bonds. I'd spoken for so long about the Japanization of our bond yields. Well, since the beginning of January, somewhere, where was that? Yeah, January, the week of the 30th, when the high was reached at 166 in the continuous contract, whatever the high was, because it's a smoothed out thing, so you might not have 166. That was peak E in the monthly. That was peak F in the weekly chart. And look, we've done a peak, a Chapman wave Eiffel Tower almost in the weekly chart. We've just done it in a little mini version, exact mini version in the daily chart, and that says that the area, let me give it to you, haven't updated it, USM, well, let's go to June just for now. USM, that's the June contract, says that 151.26, let me just double check, 150, well, it's within a point, and 151, in the 151s, you got to be careful, because when it starts to close, if it starts to close underneath 149, and that was the low back in the week of the 7th of November, you've got yourself really important support that's going to give way, targeting 142.5 as the 200-period exponential moving average. Now, I don't know if I can do that. Let me move this away here. You remember, the Chapman wave works in any time frame. This happens to be a 2-minute S&P, went to peak F, made a, I'm just going to change the chart, that's why I'm mentioning this, made a double top, that's a Chapman wave drop bucket formation, right there at 21.92, and then it pulled back, and now it's got a 1-to-1 to the downside. Be a little bit careful here if the S&P starts to give things up. And the E-minis did the same thing, went to peak E, and they're at 21.16. The real important level to watch will be 21.14 to 21.12. If that starts to give way, then all I can say is that that bifurcated market I've been talking about, and one of the reasons why we're trying to hold on to an insurance position on the market is very important. That's number one. And the other one is that the reason why we are looking at volatility as possibly being still a trade right now, a potential trade, is because that squeeze at the open has to do with something Greek or whatever. And I don't see it as being internal. I don't see leadership here. I see bounces. The only leadership I'm seeing is that we're starting to see, because rates are lower, you're starting to see the you're starting to see the financials at least have their say, and that happens. And the delayed work in the steels, the one I was talking about now, is now up 32 cents. That is a huge move. That is 6% in a day, just jumped. I mean, that's big. So okay, well, now I want to get rid of this. The reason why I was giving a little preachy there. Let's get rid of this. Close the workspace. I want to go here. I want to go to long-term charts. I want to show something. Is that it? Long-term intraday. Oh, mistake, wrong term. That's not the one. Close the workspace. Let's go to, oh, no, cancel. Oh boy, how do I get out of that? That's a copy. Close the workspace. No. And I'll come back again. There it is. Okay, so what I'm looking at here is the long-term charts mirror. I wanted to show you something very interesting. Here are the bonds. So the bonds made a high of 30.99 the week of the 15th of May. 30.90, am I correct? Yep, 30.99. Today's high is 30.99. Unbelievable how that happens. It just needs 31 to start leg D. And if you go back and look at these charts, you don't go very much higher than D. You can pull back from D. You might go to an E, but then you got yourself a real big pullback. D, pullback. This is the 30-year. So I'm anticipating that the next week, let's call it a week. What is today? Wednesday? No, let's call it a week from Friday. I want two closes in this weekly chart of the 30-year T-bond yield. The 30, up there it is, leg D in the 10-year. It's a little ahead. Oh, isn't that interesting? It's a little ahead. And we've got a new one here. So this is A, B, C. This is going to be an overlapping wave. Oh, man. These bonds, this is going to be very important. We're going to be monitoring this so closely. Why? Because if bonds squeak a little bit higher, we're going to find out whether or not we are now in a little topping area between here and maybe just a tad higher. Even if there's a pullback, tad higher would go to that E. Maybe let's call it 31.60 to 32.10. Not much higher than that on the yield, 3.10. So what we're looking at here is the Japanization of our bond yields. If the economy is really that weak, and this is just an unbelievable question for economists. If you've got folks who are buying houses and now starting to buy automobiles, but the upper level, the SUVs and the higher price are doing the best, and the increase in the profits for the auto dealers is way bigger, right? In the higher priced automobiles, SUVs, trucks, etc. If that's going on, my contention is that the other stuff is seeing a little mini recession. And you've seen that. You've seen the RTH, the retail index pullback, seen a whole bunch of things going on. So I think this is probably one of the most important weeks for bond yields that we've seen in a long time. The move off the bottom at 2.28 was 2.226 was very important, yes. But this is the move that's going to tell me, or at least give me enough information, I think, to say in the next week or two, are we looking at something that's happening in bond yields that is different to any other time? After all, look, if I drew a horizontal line across here, we've been at this level so many times for the past, since 2011. That's 4 years. So what I'm looking at here is that the longer term bonds, in this case, the bond yield, let's call it the bond yield, is not as much in demand as the shorter term, the 10-year and the 5-year, but especially the 10-year. It's already gone to leg D. And that's saying there's more strength in the 10-year. We're going to watch this real closely. Wow, I wonder if at some point we're going to get some kind of inverted yield curve or steepening of the yield curve. I wonder how this is all going to play out, because this is a fascinating period. Now, don't be surprised if at 3 o'clock this afternoon, the market is looking like it was earlier in the day before. Maybe there was news about Draghi or whatever it is. I don't know. But don't be surprised. At the same time, you cannot be surprised if there's just enough strength to try to keep the market higher, because this is this is probably the last day of fund buying, the end of the month, beginning of the month, fund buying. So we're really on our own tomorrow. So Thursday comes in the real market. This is going to be so interesting. Look at the TLT here in terms of making a lower low. I said to subscribers, it must hold 118. It's at 117.65. Now what's interesting is if you look at the TBT, whoops, give me the TBT. I typed it somewhere maybe. That's a TLT. TBT, look at this. Are you breaking junior? I think this is going to mirror the bond yield, the 30-year T-bond yield, because if it takes out that high in the daily, it'll be taking out that high in the weekly. And the weekly is at 50.22. So at 50.23, you've got leg D in the weekly chart of the TBT. That's the ultra short Lehman 20-year Treasury bond fund. And that's the equivalent of looking at the yield, right? We saw that. Now, what's really important is that this is nothing in the context of the monthly. It's leg B, and it'll be continuing leg B, just a penny over that high that I was talking about. And at the same time, you've got the same pattern unfolding. If I look at EUR-USD, look at this, keep your eye on there, same pattern, coming off the low, the first big move off the low. But if you look at the monthly here as well as the EUR-USD, this is a lousy chart. You've got tremendous resistance at 1.156. And in the TBT, you've got tremendous resistance at, oh, you've broken it. That's good. So the next result, oh, that is good because you're above the 200-period moving average in the daily. You're above the way above the 9-period moving average of 46.50 in the weekly. And you're now above, for the first time in a while, you're above the 48.09 level of the monthly. So the bias right now has to be to say, very interesting, because if the market was going to pull back because money was coming out of stocks into bonds, why would you have the market rally and bonds and bond yields rally? There's going to be there's always something going on, right? Fast. That's why I love the market. Okay, let's go back to our little nitty-gritty story here, and I want you to talk about the semiconductors. Semiconductor made a peak G/C top, daily top, very short term. This is near term. I can't call it a short term top yet in the daily, other than to say, at least in the 120-minute chart, you got your peak D, and now you're pulling back quite sharply. All right. This is the SMH, which is the market vector semiconductor ETF, and I would consider this to be quite an important. One of the tools that we're looking at, treat it as if it was an index, as if it was a technical tool, not just an index. It's saying it's done very well. It made a new all-time high, a new recovery high, not an all-time high, because the all-time high was back at, I should have typed it in, right there, at 100.20, and it's only in the 50s, 58, right? And that was, I love the way these ETFs come out. Look, the ETF and the semiconductor index came out right there. May of 2000. It opens at 78.44, goes to 84.93. The next month, June, March, April, May, June. That's 2.5 months after the all-time high in the all-time high in the S&P and the semis. The actual index itself, I believe, maybe not. All right, but it was in the high-tech sector, right? And now look, from 100.20 goes down to the 12s, and now it's rallying. I'll be back. We talk a little bit more about it. I think it's a very important.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. Let me just take a second here. Okay. So, yes, I was right. It was the top was in March of in the SOX index at 1362.10. So along comes the ETF, because of course you've got to have an ETF in a new sexy product. So they bring in this SMHs. SMHs comes out a little later, makes its high just a couple of months later after the index itself. And you're trading now at 736, way underneath there. Now, I got to go through this again because we should be matching the SOX index and the SMHs, which are in what was that? SMH in monthly was an E, and this one is only in a C. I must have missed something, so I'll spend some time on it. So let me just go through this because I would consider that today, tomorrow, and Friday is where we get a chunk of evidence within the context of the dollar's strength or weakness, bond strength or weakness, euro strength or weakness, And now I'm going to mention something else, which I always do every day. And the volatility index's internal strength. What I mean by internal strength is not the price, it's the action that the reading that I give it personally, based on what I'm looking at, if I'm looking to see whether or not fund managers have started to buy in as insurance. And the way I'm looking at it right now, there's a real good chance that if by day's end, the market gives back a chunk of the gains, closes the Dow, say closes at a plus 38. It's at plus 78 right now. The S&P closes at a plus 1. It's at 394 right now. Somewhere around there or lower, that the VIX index will actually rally and close towards the high of the day, making Thursday and Friday's action really important for two reasons. One is, for the first time in a while, we've actually got a leg B, which is a peak B today. There's no new high above yesterday's high of 15.05. That's the first time we've seen that in a long time. There are tons of leg A minuses because they failed. So that's saying in time we've managed to survive, even with a spectacular sudden move to the upside that occurred at about, what was that, 12 o'clock or 12:20 or something. And that's also saying that the weekly chart is finally in play. And all I can say is a close back into the 1330 area says, what are you talking about in play? I'm in play. I'm playing with your emotions because I'm not prepared to break out yet. I still see internal strength as we just continually rotate in this whole area. Here's the other thing. The 9-period moving average and the Dow was 18,091. We're trading at 18,093 right now. Actually, now it's a little higher than 9 EMA. But this would be the 7th session if we close under the 9 EMA. You're talking about real weakness, and yet the market hasn't broken down. And that's why I always say, keep in mind, lock into your mind that sometimes you can use time, sometimes you can use price, sometimes you can use time and price. So this morning we're using time and price because you shot up in a very short period of time, and then all of a sudden you gave it back. If you're looking at the daily chart over a period of 3-4 weeks, you're using up a lot of time, not all that much in points. So if I, just a quick thing I got to mention here to look at the comp index, COMPX, as we're about to wrap up. Yeah, comp index is really up. Leg D in the daily hasn't gone above the 51,1983 level, and that's going to be very important. A break above that and holding says that the monthly chart is now broken out to a G/C. Whoa, this is what an interesting market. I mean, I could be here all day. All right, stay tuned for the next show. I'll be back. We've got fabulous shows all the way through today. I'll be back tomorrow. Have a great rest of the day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.